Hey traders, Nick here looking at Microvision one more time. I believe I've done 3 videos on it. The first one was in April, I believe after the reaction to the earnings report. So somewhere here, 29th, maybe 28th, 29th, after the drop. So I had beef with the sellers, not because they were selling it, because of the reason they were selling it. I think whatever they missed, they were looking at the wrong things. I said they're not wrong, but they're selling it for the wrong reasons. And so if somebody took along, I guess they made money. Now, what I'm going to do today is trying to update what's going on here and reiterate what I said in my last video, which is somewhere around here. I'll go check in a second. Yeah, so somewhere when he was still toying with 10 and lost just 10, so October 22nd or something like that, somewhere around here. So it had already lost 10. And in that video I said, technically the assumption is that once it had lost this line, which was 10, 4 or 3 becomes the technical target. And I literally said, did I scare you already? I was trying to do it on purpose, to not because I was bearish the stock. I was trying to discourage somebody to double down, because this was like a highly on scenario where the stock breaks, and regardless of the company and how good the prospects are and how much you love the company, when the Wall Street doesn't like it, it doesn't matter. You know, it could be gold, but if the buyers are not there and they're selling the pops, they're going to punish the buyers. So every pop is being sold systemically, and that was my point. Once you lose the trigger, the neckline, then the machines know to continue selling pops, and that is the opposite of what's going on in the markets. Every dip in the market is being bought. Well, this one, every pop is being sold. Now you can find 1,000 different reasons. I don't care. The reasons are there. By the way, thank you for being civil in the comments. I want to hear your comments. I want to know more about the company. So if you know like of an event or a milestone that was missed and it was just temporary, set me straight. It will get me more educated about it, and we'll debate. My comments now are more about price action and what I would tell my brother if he or my sister if they're trying to buy pops in this company. So I said once it lost 10, 4 or 3 are targets, and here we are just under 5. I hate to be right about that, so let it turn around here. That's fine. So now what? What do? I don't buy pops. I use pops to get out of trouble. So if I bought it a couple of days ago and it pops back up to where I bought it, I get out. Now, tiny sliver of hope is if it breaks out of these 2 fails, and that coincides about 6.2, then maybe it pops to 7.4, 7.3. Technically, it looks like a tiny inverse head and shoulders, which is bullish. And if you get above that hurdle, then you get little pop. So if I get that, and I'm stuck long and this gets me out of trouble, I should get out and re-engage somewhere else when we have more clarity. All right, so I should expect pops would be sold, and it's very easy. So those are the alerts that fired today. Today is, did I say this already? 1-5. Wednesday, and it was a pretty bad day in the market. So today's drop of 12% is not all its fault. Nevertheless, there it is, right? So they are selling pops. So every pop is getting sold. Every pop is getting sold. So I shouldn't expect the same until 2 things happen. One, it hits a floor where the market says, okay, now I'm starting to like it, and we'll talk about where that could be. Or 2, you overtake this trend, and it's not a trend line. You can't connect these dots and say, oh, it's broken. No, it's levels. This is a significant level, and that's mini good news 1. Look at this pop. That was pretty big. That was considerable. So if you catch another one of these on a trade, I would book it personally. So this is level 1. If we can take out, I just shared that amount, that number. I'll put a line on it so we can refer to it next time. And so then now we're talking about, okay, maybe you can start building an ascending trend, and then repeat the process on every neckline they've lost. All right. So what happens on the pop? They're selling. I wouldn't expect the turnaround until that behavior stops. What's the first sign of it stopping? I'm going to give you a second to think about it. What's the first sign of you making a turn? First sign is to stop making lower lows. Guess what? Today they set a lower low. So if you want to be hopeful, You look back to last year, January, almost exactly a year ago, January 5th, that was exactly the same value. Exactly the same value. What was the low on January 5th? 4.86. The close, 5.52. What was today's low? 4.87. They are 1 penny away from exactly 1 year ago. 1 penny. All right. So if you want to hang your hat on 1 penny, you can, but you must stop out immediately if it goes below it, because then you have two of these. Then you were talking these two massive candles, and it doesn't look like much, but those massive candles were 50% rallies. 50%. So they price out 50% pretty quickly. So if you bounce, if you catch a 40% rally, 20, 15% rally, if I do that with this stock after this, I would get out. I would call it nice work, Nick, get out. I don't have a trade. I don't have friends who have a trade. I'm trying to help out people who are trying to trade and catch a falling knife. This is literally a falling, not literally, figuratively, a falling machete with a tiny little handle and a gigantic blade. You're going to cut yourself if you're not careful. So we're 1 penny away from exactly to today 1 year ago. That is pretty incredible. Now, the good news line that I said, let me see, do I have lines? I must have, okay. So buy the dip, swing up opportunity, and then you have to stop out. Guess what? They didn't. This whole zone should have held. It didn't. So now it becomes a problem on the way up. So I would move this one and put it here. Now that becomes a resistance zone. This is how we update charts. So now I know what to do. Resistance already there. I have one here. I have one above it. That's about here. Actually, I can put it as a hard line. This one, it's pretty close to being a hard line. So, and everything here is resistance. In fact, this level from here to here is high volume. See these two faint candles? That is a lot of volume. So now we're below it. It's going to take a lot of effort to cut through all that volume. Okay. So now what is that line I mentioned earlier? So the first glimmer of hope, other than putting in stop making new lows, is this guy right there. So this guy is resistance, but if it breaks above it, I'm going to make it a tiny font because that's how much of a tiny opportunity it is. Whatever I get out of it, I take, but that's step one. Okay, so that is step one. I don't want to make people overconfident, and it immediately hits a wall of resistance. Okay. So that's step one. I can't put a line here because this was a fresh low. The line goes to last year. So how about we do that then? We do this to here. And that gives us a visual reference of 1 year ago. So if you missed the rally and you're starting to look to enter, fine. But there's no sign that it hit a bottom. The bottom is not a point in time, it's a bottoming process. First step, stop making lower lows. If I go to a 15-minute chart to see maybe I can find a bottom, no. This is a 15-minute chart. That's basically today and yesterday and Monday. They're still making lower lows. So if I buy it here, I'm anticipating that it is going to end falling here. So I don't like to anticipate things. If you twist my arm, maybe I would sell some puts if they have options. I haven't looked to own shares lower. Other than that, I stay looking at the daily chart. Let me take out my lines so we don't clutter it up. Oh, by the way, this was a neckline they needed to hold. That brought this. This was a neckline. This wasn't. So like one debacle after another. Through no fault of the company's own. Maybe they did dilution. I don't know. That's up to you. But so the chart is difficult to say with confidence this is a good time to get in because of these two candles. They're massive. They're massive. So arguably 280 was the real breakout. 280. I'm not saying wait for it. I'm not saying it's going down there, but I'm saying there's no evidence that this is a floor, and there's a whole bunch of froth between here and there. These candles came way too fast. These are dailies. So in one day, MVIS went 30% and then rested, and then another 30% another day. I'm eyeballing. And then this So these are gone. Now it's down to these two. They don't always take all of them back, but it is still falling. Lower highs, lower lows. There's no evidence of stabilization. The behavior is what you need to look at. What are machines doing? They're selling pops. They're selling pops systemically. They're selling pops. I shouldn't anticipate anything better. So let's talk fundamentals, not the company prospects. I'm sure they're doing a lot of hard work. And in fact, here's what happened. The good news out of falling stock prices. First of all, the bad news is the top line is going the wrong way. I don't know what's going on with the sales, but the sales now are much lower than 2 years ago. I don't know why. Regardless, that's not encouraging, so it's not really a growth company yet. Maybe down the future they're going to explode. That's fine. But right now, if you're showing me a P&L, I would say, what's going on? And if I go to the statistics, and here's the good news. First of all, this number is ginormous. Price to sales. Huge. I haven't seen anything as big as this in a long time. In fact, I have. You know when? In April, when I did my first video. That number was 1,000. Now it's 400. Why? Because price has fallen. Even though their sales fell, price fell more. So they're coming back in line. So what does that number really mean? It's how much exuberance there is in the stock from the people. Why? Since it's not successful now, then the stock price is made up almost entirely of future successes. So this says that if this was a pizza shop, and I walk up to the store and I say, you know what, I would like to buy your store. I love what you're doing. Even though you don't have good sales, I want to buy your store because I think people are going to, whatever. I want to own it. In fact, I'm going to pay you 400 times your yearly sales today. Would you sell your store? I couldn't run out fast enough out of the store. Drop the keys and run out and take his money and run out, or her money. So 400 years are baked into the stock price right now worth of sales. Now, this number normalizes. In fact, it dropped from 1,000 years to 400. To give you points of reference, Amazon, one of the fastest growing companies on the planet, that number is 4. Tesla is like 24, 25, 22. It fluctuates. Google, Microsoft, and such, they're between 8 and 11. What else? Neos, I think last time I checked was like 14. Maybe now cheaper because the stock price has fallen. So this is gigantor. Zoom was the highest one that I saw, and that was during the pandemic, and that was like 125, 120. Now Zoom's is in the 20s. In fact, let's go check. So it normalized. So now it becomes a bargain, Zoom, because it's growing sales and the price to sales normalized. Where is it? Price to sales, 14. That is dirt cheap compared for a growth company. Why is it a growth company? Look at the income statement. Revenues from 150, 330, 660, 2.6, 4 billion. That is not a pandemic year. That wasn't. That's all legit growth after a pandemic year. So that's how you normalize a price to sales ratio. Well, MVIS, they're not there yet. So you can't use, quote, fundamental metrics to make the argument. So you have to do your homework on the company. All this sounded like I'm poo-pooing the company. I'm not. I'm poo-pooing the results, the actual financial metrics. I can't use them. So you have to do homework and tell me what you're missing, Nick, is the fact that in March, they're going to blah, 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 something that's going to explode and it's going to sell $1 billion worth. Like Novavax. Oh, what you're missing is that they have $1 billion of pre-orders and they're not on the books yet. And as soon as the vaccine is going to come out, something along those lines, then I will take it. Then you can definitely buy the dip if you want to. But I'm telling you what the machines are doing based on the price action. They're selling pops. So be careful of chasing so don't bail that person out, because when you get to here and you buy your call here or you buy your shares here, you're bailing that person out and then it's going to fade. So what I would do is wait for it to pop to here and then go above it, ideally come back and touch it and then run. That's how breakouts happen. You touch it, you go above it, you test for footing, and then you go. I promise. That's how they always happen. I promise. It's not my opinion. That's how they actually happen. And if you don't believe me, you can join. Actually, you can't join me. We're at capacity. So all day. Today I had 195 people watching these 18 stocks, and including the S&P, Qs, and whatever. And all day it plays out almost exactly how you draw the lines. It's not like I can tell if it's going to go up or down, but I know once a line is crossed, what is going to happen next, and that's the point. Where is this going to go now that I see this or that? For example, Tesla. I knew that 3 days ago I drew this line. I moved it yesterday and I moved it this morning before the market opened. I said, if this is lost, this is where it's going to go. 1080 was the chat post. And today it fell to 1081 or 1080 out of the blue. I didn't know it was going to fall, but I knew if it loses this line, it was going to get here. If it loses that line, it was going to get here. Therefore, it will trigger that one. So we knew not to expect upside if on a meandering day. And mind you, we drew the upside potential perfectly on Tesla. So charts work. These comments are not hogwash. I promise you they work. It's like self-fulfilling prophecies. Machines are doing a lot of the trading, and they're predictable. They follow logic, code, and then they change code once the parameters change. Like right now, the code is sell pops, sell pops, sell pops. Once you start establishing a bottom and you go sideways for a little bit and you start rising, then they stop doing it. Then they start buying the dips, and that's how you form a bottom. Way longer video than I wanted. Sorry about that. But I think it's pretty valuable. Signing out.